A lot of people have asked me about the rise of crypto treasury companies. What started off by MicroStrategy and Michael Saylor a couple of years ago is now morphing into a broader movement that is not only in the United States, but also in Australia, Japan, Canada, Singapore, Hong Kong, and even China. Now, what are these crypto treasury companies and why would investors flock to them? Now, effectively today, if you want to buy crypto, you have three options. Your first option is to log on to Coinbase and buy a crypto, any coin that you want to purchase, such as Bitcoin, Ethereum, Solana. You can then go into staking it and all of that, but there are slightly more complicated ways of doing it. Your second option is to buy an ETF. An ETF only exists today for Bitcoin and Ethereum, although some more are coming soon. And your third option is to buy one of these Bitcoin or crypto treasury companies. So within the three options, why would an investor pick investing in these treasury companies specifically? The reason why is because they promise that they would be able to grow faster than and have greater returns than the actual underlying asset that they're managing. So for example, taking strategy as an example, you could either purchase one Bitcoin today for 105,000 US dollars, or you could purchase 105,000 US dollars worth of MicroStrategy shares. And the promise is that over the long term, maybe 2, 3, 4, 5 years, the returns on the MicroStrategy share should outperform Bitcoin, despite MicroStrategy effectively just buying Bitcoin with the money that you give to them anyway. And the reason why is because they have coined a term called accretive dilution. Now, historically, anybody in the financial industry would think, dilution is bad because you are diluting shareholders. However, in this new and evolving space, this is referred to as accretive dilution, where when you issue shares or you issue debt, it's actually for the benefit of the common shareholder over the longer term. So for example, if I was to issue $1 billion in debt and use that to purchase Bitcoin and put the Bitcoin on my balance sheet, I expect Bitcoin to outperform, any other treasury assets, especially the US dollar, over the next 3 or 4 years. And so this is accretive dilution, as I am now issuing debt at a very low interest rate, or sometimes even zero in some of these treasury companies way, and buying a hard asset, for example, Bitcoin or Ethereum or Solana, which I expect to rise over time. So a lot of shareholders are looking at this with those lens, and looking at the fact that, perhaps these companies can outperform buying the underlying using various different strategies and accretive dilution, or as some of them refer to it as intelligent leverage. Now, there's no free money in finance. Obviously, there's about 100 of these companies that are popping up. There's about 50 more that are coming. They're global. They are tapping into the capital structures of each of their respective jurisdictions. For example, in the USA, ATM is quite common, which is at the money market offering for equities. In Australia, it's different. In Japan, they call it moving strike warrants. So all of them are trying to do different things and optimize for their own jurisdictions, including tax and the capital markets and the offering and the depth of that, and their respective currencies as well. And the risk over here is effectively that as they compete to acquire more and more investors and shareholders for the same underlying asset, that they would take more and more risk, perhaps offer more yield on the debt instruments, perhaps over dilute and go negative to their net asset value, and perhaps also issue options and go into sophisticated structured products, which would eventually blow up in the event of a bear market. We're obviously following this. I think I've got about 10 or 15 treasury companies on my radar at the moment. Of them, I would say maybe only three or four have the right management to navigate through multi-year cycles. And this is definitely an exciting space, and it's definitely growing. But it is one of the biggest things that is happening in crypto at the moment. I think the biggest risk to these Bitcoin treasury companies or crypto treasury companies is potentially trading below net asset value due to sophisticated risks that they've taken, but potentially being targeted by regulators in the future as being an investment company that is a treasury company, but that is sort of morphing as a common sort of equity that is trading. So there could be some rules around that could target them in the future. I don't anticipate that risk to materialize until 2027, so until Trump is in power, and then we'll see what happens after that. So if you've got any questions on these treasury companies and the rapid growth of it, then feel free to reach out. We've done a lot of work on it, and we've got a reasonable framework to determine whether or not some of these treasury companies are legible or good, and how that impacts the broader crypto market anyway. Thanks.